Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and welcome back to Reverse Mortgage Radio. I say back because I know a lot of my listeners have listened for a long time, so I'm glad that you're continuing to listen, and hopefully we have some new people listening as well. Today, we're going to be talking about a lot of serious stuff. We're going to be talking inflation. We're going to be talking expenses and interest rates and taxes, all kinds of really nasty stuff. So I figured that it would be a good day to start out with this day in history. I haven't done that in a long time. I don't know if you remember back when I used to do it, but obviously today, if you haven't noticed, if you haven't walked outside and smelled it, today is 420 Day. Anybody know what 420 stands for? It's the day that you get to smoke all your wacky weed or whatever. And I know some of the listeners are some old hippies. It's funny because my mother-in-law, she was born in 43 or 44, and she was actually, I got to clarify this with her. I thought she was arrested one time for protesting Rocky Flats. She was out there with this picket sign protesting against Rocky Flats, and it was kind of funny. But I know some listeners had probably partaken in their fair share of the smoking. But here's a little history for you. Since the 1970s, people have celebrated 420 Day. But why is it called 420? There's a whole bunch of myths around how it came to be. But Time magazine actually told the story of 5 teenagers from San Rafael High School in Marin County, of course, California. We knew that. In 1971, they would meet after school at 420. And that became their code for marijuana. 420. They just look at each other. 420. Yep. Thumbs up. And one of the 5, his name is Dave Reddix. He ended up working as a roadie for the Grateful Dead, of course. And he further popularized the term. And in 1991, the magazine came out. It's called High Times. It came out with a flyer and initially handed out by a group of deadheads in Oakland, California. The flyer was an invitation to a 420 event to smoke marijuana. So it was on April 20th, 1990 at 4:20 p.m. That was the first time, and that's how it became 420 Day. So happy 420 Day to you. However, there's some other national holidays today. National Lookalike Day. This is kind of humorous because it's back when I first got out of the Army and I was trying to find my way. I worked as a cook and I did construction and I was actually selling Kirby vacuums. This was in 1986. I was selling Kirby vacuums, or trying to, not very successfully. But what happened, I was bouncing my rent check. I mean, I was starving. And I ended up in the Army. They didn't have the GI Bill in the 80s when I went there. What we had to do is we put every month some money away into some kind of a savings account that then the military matched or doubled or what have you, and I could go to college with that. Well, I chose not to do that. I chose to cash my money out, take my $2,700, which in 1986 to a 20-year-old was quite a lot of money, and I caught up my rent. And then some people I worked with thought that I should become a model. I said, you got to be kidding me. So anyways, I went to this modeling school, and I sat down across the desk from this really hot lady her job was to get my money, obviously, because she said, I look like a cross between Robert Redford and Don Johnson. I don't know if you remember Don Johnson from Miami Vice back in the day. He won a Golden Globe for that show and received an Emmy nomination. I didn't know that at the time, but I thought, hey, Don Johnson and Robert Redford, yeah, you bet. Here's my $500 for this modeling class. And I went to one class and they were showing you how to walk down a runway, or not a runway, what's it called? A catwalk. And I said, no, this is not for me. I don't walk that way. So, but National Lookalike Day, because the model, it reminded me because the model was saying that I look like Robert Redford and Don Johnson, which of course I don't, but who knows what she would say anything to get my money, I'm sure. It's also National Lima Bean Respect Day. Do you respect your lima beans? You better. It's National Pineapple Upside Down Cake Day. Here's a good one. National Cheddar Fries Day. So 420 is also National Cheddar Fries Day. You think they're combined? 420 Day and National Cheddar Fries Day. I'll bet you somebody who likes 420 ended up creating that national holiday. And it's National Volunteer Recognition Day. This is something serious because I know just this last week in my Kiwanis Club, which is a volunteer service organization, we help youth, there were two members in my club. One this week turned 89, and the other one had his 90th birthday on our meeting. And these people never miss a meeting. They volunteer. They're so active. Neither one, you'd never, ever, ever guess that they're as old as they are because they're so active. It's funny, the 90-year-old back a few years ago, he was telling me this story about how he was playing tennis with some old guy. And I said, John, how old is this old guy? He said, I don't know, probably 87 or 88. I said, how old are you? He said, 86. I was like, it's all relative, isn't it though? Because, he doesn't seem old. He doesn't have an old mentality, which I love. So, okay. So that was for the fun for the day. Now I know you don't believe it right now, but you are listening to Reverse Mortgage Radio. I'm your host, Bruce Simmons, and I'm the Reverse Mortgage Manager for American Liberty Mortgage in Denver, Colorado. You can reach me directly with questions, any question about reverse mortgages at 303-467-7821. 303-467-7821 is my direct line that rings right to an office that I have in my house. I got that number in 1999 when I got laid off as a mortgage broker and decided to do business, just do it out of my house. There was no licensing back then. And I kept that phone number all these years, and I've got it forwarded to my cell phone now. So you can always reach me at that number, and it's my number, 303-467-7821. I've been with American Liberty Mortgage 13 years, something like that, 13 or 14 years. So I'm not going anywhere, but if I did, you could still reach me at that number, 467-7821. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. And next week, my web guy will have this show on my website. He'll have the podcast all ready for you, and you can listen to the entire show. If you have to cut out early today, I understand. I'm kind of disappointed in you, but I understand. All right, let's jump into the show. A couple things I want to talk about that are a little more serious than 420 Day. You may want to partake in some of that after we talk about this. But there was an article that came out in Market Watch recently about this guy. It was a question, ask a financial advisor. He said, should I live under a bridge? I get $5,600 a month in Social Security and retirement income. That should be a pretty good income, you'd think. But my property taxes will soon be $20,000. Who can help, he says. $20,000. Holy cow, that's what? Almost $2,000 a month for taxes. And unfortunately, I hate to say it, but we're on our way there. This guy lives in Washington, Emmons, Washington, or something like that. And so it's very expensive, and it's a nice area. And honestly, he probably should sell his house. But what this guy says, here's the official question. He says, I'm a 76-year-old widower who's a retired school teacher. My Social Security and retirement income is fixed at about $5,600 a month. I've lived in Edmonds, Washington for 49 years, and my property taxes rise quickly. That sound familiar to anybody now? My property taxes will likely be $20,000 or more for 2025. I think home sales drive up my property taxes, not improvements. I do not have the money to keep up with these taxes with a $10,000 IRS limit on deductions. That's that SALT deduction. What is it? State and local taxes, SALT, yeah, state and local taxes, that he can only deduct up to $10,000. That was part of the bill to try to motivate states to reduce their taxes. It's not working, though. And the answer came from a financial advisor. He says, your situation is actually quite common. Doesn't that suck? I mean, that's terrible. He says it's actually quite common. Mark Struthers, a certified financial planner at Sona Wealth Advisors, says, as we live longer in retirement, inflation can have a devastating impact on incomes, he says. Compounding, it's magical when it works for you, and it's awful when it works against you. Two of the biggest culprits are healthcare and housing inflation, and the cost of maintaining and paying taxes on a home is usually correlated to its value. And here in Colorado, if you think about it, our taxes for this year, if you haven't already paid them, you're late. I think they were due by the 15th of, or maybe I don't remember, it's 15th or 30th if you're paying the whole year. If you paid the first half in February, you've got until June 15th for the second half. But if you haven't paid taxes yet, you better get on it. But unfortunately, in Colorado, our evaluation period was, I think, January of 21 to June of 2022, that year and a half time period. And that was the peak of the market. Now, granted, I don't think values have really dropped off tremendously, maybe a tad, but they've definitely leveled out somewhat. In some cases, I'm seeing appraisals come back under the assessed value, which is a bummer because it's too late to object to that value. But we'll have to just wait and see what happens in 2 years. But you're stuck with this assessment for 2 years. Anyways, he says here, or another person says, you might be a good candidate for a modern reverse mortgage, says Kenneth Robinson, a CFP at Practical Financial Planning. I don't know what a modern reverse mortgage is, but he goes on. He says, once federal regulations were adopted some years ago, try 35. They were adopted in 1989. Robinson says, I used to dislike reverse mortgages. Now, for many homeowners, they can be the most efficient way to stay in their homes. That's good. I mean, it's good that there's an option. It stinks if you have to get a reverse mortgage just to pay the bills on your home. But instead of, say, traveling or just having it for emergencies, which a lot of people do that as well. But he says here, basically, a reverse mortgage is a loan where home equity is turned over in exchange for regular monthly payments. That's an option. And I don't really like the way he explains it there because you're not turning any equity over per se, and it's a little bit. But anyways, he says, as a result, homeowners no longer make mortgage payments as long as they live in the home. But the loan and interest are repaid once the homeowner sells the home or passes away. Most importantly, you don't have to pay back the loan as long as you live in the home. The home is the only asset the lender can use to pay back the money owed, Robinson says. If the loan ends up being more than the home is worth, the difference cannot be made up from other assets, and the line of credit will grow at a rate that's determined at the outset of the reverse mortgage. That's not 100% correct, kind of, but if he crunched in a whole bunch of different possibilities there in one sentence or one little paragraph. Basically, let me explain real quickly how a reverse mortgage works. It's an FHA insured loan most of the time, and it allows people who are 62 and over to convert a portion of the value of their home into money that they can use. You can take that money in a number of different ways. He mentioned a couple here. One is as a monthly payment where we pay you every month and you don't have to make a mortgage payment. You can also receive it as a line of credit where the money is set aside in a line of credit and you only tap into it whenever you need it. So let's say to pay your taxes. That's a great way that you can use the reverse mortgage. You can also take money out as a lump sum. Unfortunately, you hear over and over about the debt, consumer debt. And we're going to touch on that too in just a minute. But for seniors, especially too, for our baby boomers and people who are 65 to 75 years old are racking up immense amounts of credit card debt and keeping that on the books. So they're not paying it off every month. And because they're using it to pay the car repair, to fix the furnace, or to fix the gutters on the house, or whatever the case may be, to buy groceries, which hopefully is not the case with you. But what happens then is you can take a lump sum from the reverse mortgage and pay off those credit card bills, or pay off that car loan, pay off your existing mortgage on your home, and save yourself the principal and interest portion of that mortgage payment that you would normally pay every month. You're still charged interest every month that based on the amount of money you draw out. So if you take out $100,000 today, you're going to be charged interest on that $100,000, but you don't have to pay it. It's not required that you pay it every month. What happens is you're still charged the interest. So where does that interest go, right? That's a big question people have. It gets added to the loan balance. It's called negative amortization. That's one of those silver dollar words my grandpa used to tell me about. Well, he didn't tell me. He said, that boy came back from college speaking those silver dollar words. That's what he liked to talk about. He was an old rancher and ranch hand, really. He never owned a ranch, but he worked on ranches for people. And he liked to talk like that. But anyways, negative amortization is where the loan balance grows bigger over time instead of smaller. Regular amortization or positive amortization is where you make a payment and your $4.84 goes to principal and the other $1,800 of your payment goes to interest. That's regular amortization because your balance was reduced by that $4 and change. Whereas negative amortization, you're charged interest, but you're not paying it. So that interest that you were charged this month gets added to your loan balance. And then it gets added again to the next month and the next month and the next month. So every month you get a statement in the mail or online, and you look at that statement and you're going to see your loan balance getting bigger and bigger and bigger. The key thing I tell everybody that I do business with is if looking at that statement every month is going to cause you more financial stress than the benefits you get from receiving the reverse mortgage to begin with, you should not do a reverse mortgage. And I've had people decide not to do it because of that negative amortization. And as the interest rates go up, which we know we're in a rate increasing environment right now, that's a whole nother topic for another day. But interest rates are not coming down like people anticipated, just like last year. That's what drove me crazy. At the end of this year, people were saying, oh, well, rates are going to start dropping. The Fed said they're going to lower rates 3 times this year. I'd be surprised if they do it once. And that's not going to have any effect on the reverse mortgage rates. But either way, the amount of interest you're charged gets larger and larger over time. So please, you have to be okay with that. And that's also one of the reasons why we can't loan 50, 60, 70% like we used to. Like we used to back in 2005, 6, and 7, we would loan somebody in their 80s, we would loan them 70% of the value of the house. If their house was worth $200,000, they could get like $140,000. Of course, we realized after 2008 what happened with that. So many of these homes were upside down. And then if that person had to move, they passed away or they moved to assisted living, now they're upside down. Their heirs are not responsible for the home though, for paying that loan off. So the heirs inherit the home. And now that home is only worth, let's say in 2008, it went down in value, so it's only worth $150, but they owe $250 on the loan in that situation. Then what happens? The heirs inherit the home, they sign the house over to the lender, and they can walk away. The lender sells the house for whatever they can get for it. So let's say they sell it for $150. The heirs are not responsible for that extra $100,000 loss that the lender is on the hook for. But the lender is not really on the hook because there's mortgage insurance on all reverse mortgage loans. So the lender contacts the mortgage insurance company and they pay the lender the $100,000. So the lender is not losing any money. They're not going to come after the heirs or the estate or the homeowner for the loss. That's what he's talking about here when he says you don't have to pay back the loan as long as you live in the home. The home is the only asset that the lender can use to pay back the money owed. That's it. It's called non-recourse. So the lender has no recourse on any other assets you have. If you own $1 million in stock, and that's all going to go to your heirs, regardless of how much underwater on your home you are. Okay. So there's those different ways that people can take money out from the reverse mortgage. You have to continue to pay your own property taxes and homeowners insurance. You have to live there as your primary residence. You have to maintain the home and keep your name on title. As long as you do those 5 things, the lender can never, ever, ever kick you out of the house. You can never outlive the money. That line of credit that he talked about, if you have money in a line of credit and your house goes upside down, where you owe more on the house than it's actually worth, but yet you've got $50,000 available in a line of credit, that $50,000 is still available to you, no matter what happens to the value of the home. That's a pretty sweet deal. So that's the quick and down and dirty in a nutshell how reverse mortgages work. But please feel free to call me with any questions at 303-467-7821. 303-467-7821. That's my direct line. You can also visit me online at reversemortgageradio.net. My name is Bruce Simmons, and you are listening to Reverse Mortgage Radio. Now let's quickly jump on to another article that came out. Now this is from a guy that I follow pretty religiously, Shannon Hicks. He's got a podcast and a YouTube show and all this stuff called Heckem World, a website, Heckem World, HECM, because that stands for Home Equity Conversion Mortgage, and that's the name of the FHA insured reverse mortgage program. So heckemworld.com, if you want some really good information. It's geared towards loan originators, but I always like to peek behind the door sometimes, whether it's used car salesmen or whether it's web people. How do they do SEO stuff, the search engine optimization? How do they do that? Let me peek behind this door. You can get a peek behind the door on origination of reverse mortgages if you go to Heckem World and Shannon Hicks. You could just Google it, go to YouTube. He's got great videos. Anyways, he talks about here about Americans have more debt than ever before, which is especially dangerous for older Americans. Now, he posted this back on the 12th of April. He says it's especially dangerous for older Americans living on a fixed income. Today, individual debt levels and credit delinquencies are approaching pre-recession levels similar to those seen before the great financial crisis and recession in 2008. Now, I'm not thinking we're going to go there. I don't think the values that we have on people's homes are going to drop that way. But I do still think a recession's coming down the pike, and we'll see what happens. But he says here, relief in the form of lower interest rates is increasingly unlikely, as the March Consumer Price Index report shows a rate of persistent, not transitory, like the Federal Reserve told us, inflation is accelerating. Unfortunately, that's the consensus right now. And that's why the interest rates on reverse mortgages have been going up the last few weeks as well. The first couple months of this year, people still were expecting the Federal Reserve was going to lower rates. And so those expectations get built in to our interest rates when we are looking at reverse mortgages. The rate market, if you will, interest rate markets are so driven on expectations. After the March report came out, well, expectations really started shooting up, and they've been climbing, holding steady, climbing, if you will, for a while. But they took a shot up this last few weeks because people are realizing the Federal Reserve's not going to be lowering rate. They know there's not going to be a rate cut in May, and certainly there's like a 20% chance in June, supposedly. I don't think we're going to see one in June either. Some people are now putting their hopes on July. We'll see. That's all I got to say. So he says inflation and higher interest rates are a toxic mix that's pushing more Americans into financial jeopardy, as many are purchasing increasingly expensive everyday purchases on credit. So more and more people are using credit, unfortunately. That's what really stinks. And that's what I was saying earlier about, even if you're able to meet your monthly expenses, let's say you don't have to buy groceries on credit, but you don't have to do all this stuff on credit, but then your furnace goes out. Now you need $10,000. What are you going to do? You don't have it. A lot of people don't, I should say. Some people do. If you do a reverse mortgage and you've got money in a line of credit, let's say we can only loan you $150,000 on a reverse mortgage, but your existing mortgage balance is only $100,000. The way the reverse mortgage works is we'll pay off your existing mortgage and now you're saving, let's say you're saving $700 or $800 a month in principal and interest. You're still responsible to pay your own taxes and insurance and maintain the home. But that other $50,000 that we make available to you, you do not have to take. You leave that in a line of credit. Then you've got your car blows up. Boom. You need a car, right? Your furnace goes out. Gutters are falling off your house now after all those ice dams that are on your roof. Or you have a $4,000 deductible for the roof. Your insurance is going to pay for it, but you have to pay $4,000 for a deductible on your roof. Okay, where are you going to get that money? If you have the money from the line of credit set aside as an emergency, even if you own your home free and clear, let's say you just set up the reverse mortgage for emergencies. Then you don't have to put it on an 18 or 20 or 30% credit card or take out a 10 or 11 or 12% HELOC that requires payments. You can make payments on a reverse mortgage, but you're not required to. That's a nice thing. So he says here, he continues on, it's likely with their credit cards, let's see, he says, so how do Americans cope with today's higher prices? And he continues on with the article. This is the article from Shannon Hicks in Heckam World. He says it's likely with credit cards. Federal Reserve data shows that delinquency rates for consumer debt are climbing fast, approaching the levels seen in years leading up to 2008 recession. So he says, when it comes to debt held by Americans aged 65 to 75, MarketWatch reports the following averages for 2022. This is 2 years ago. The average mortgage balance was $175,670. Installment loans, $28,000, almost $29,000. Car loans, $24,000 almost. And the average credit card balance, $7,700. If you have just one credit card and you're being charged 18% on that or 20% on $7,700, what's that mortgage or that payment? In addition to a car payment or any of these other things. It's unbelievable how much debt. Use a reverse mortgage to pay off a lot of this debt. It makes so much sense. It's a way out, and you can stay in your home. The other thing we didn't talk about with that guy with the taxes is the reverse for purchase. And if you want to learn more about that stuff, please visit me online at reversemortgageradio.net. reversemortgageradio.net. If you click in the upper right-hand corner where it says Reverse Mortgage Radio Show, you can go there and check out all the podcasts from my radio shows. I think about a month or two back, I did one on the reverse for purchase. Go there, listen to that one if you're thinking about maybe possibly selling your home and how a reverse mortgage can work. Or, shoot, just give me a call, 303-467-7821. That's my direct line, 303-467-7821. That'll ring to me directly. You can also, too, if you do visit me online, you can download my consumer guide. I'm in the process of updating it, so some of the stuff's a little old. Give me a break. I'm working on it. But you can download the free Reverse Mortgage Consumer Guide. It's got a ton of great information if you don't feel like talking to me. Hope you enjoyed the show. I hope you have a great day and have fun on 420 Day and National Cheddar Fries Day. See you later.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.